What's up, everybody? Rel here from E&J Capital. Rel, most importantly. Listen, I know y'all miss my face. I've been working on real estate. I'm trying to get my knowledge up on that. So, stocks is not my passion that much. I'm gonna hand my portfolio to my boy one day. Now, honestly, that's bull. I've been doing a lot of work on real estate, trying to learn that. That's my next goal. So I've been gone, but I'm back better than ever. I'm here to talk to you about capital gains taxes. So you're probably wondering, Rel, what is capital gains taxes? Capital gains taxes is when a profit is realized when you sell. So if you don't sell, it's considered unrealized. And when you sell it, it's realized. Yo, why are you in my flick for, kid? A favorite long-term investors. So for all my people that are long-term investors, keep in mind that if you sell within a year, you're going to get taxed at the highest bracket dependent on your ordinary income. So you're going to want to keep in mind that taxes are very important and very crucial to your investing career. Depending if you're a day trader or option trader, yes, you're going to be paying taxes out the ass. Another thing I want to talk about is, besides the fact that I know y'all love me. Hey, come here. Now stay there. So if you have Robinhood, unfortunately, listen, I hate Robinhood. I hate that you guys still have it. But if you have Robinhood TD, all your tax information is going to be on your portfolio. It makes it easy. Tax to get is easy now. They just print it for you, mail it to you, find out. And also, if you lose on investments, make sure you write that off in your taxes so you get a little more back.
Say you lost $9,000, you could carry $3,000 each year.
You sure? Actually, he's not even my partner. I fired him. What this random saying, you can carry over your losses. For example, he said if you have a $9,000 loss, you can carry $3,000 each year. If you're losing that much, you might want to reconsider your strategy. Calm down. I know everybody wants to be day traders and make all this money. Relax. Calm your tits. Fractional investing. Yeah, it's becoming popular now. I think it's a good idea.
What is it?
Yo, I'm getting into that. Don't interrupt me. Fractional shares is like investing in an index fund. You're buying fractional shares. You can put as much money as you want. You can put $1, $10, $15, $20, $1,000. Cash App's letting you do fractional investing from $1 to $50 to $100 to $200. Listen, it can be good and bad. If you're just dependent on investing in a single company, then yeah, go for it. But if you want to invest in multiple, just go to an index fund. They pay dividends as well. If you want to own the best of the 500 blue chip companies, go to index. It's so easy. People don't understand that. You're doing literally no work. You're paying less fees as well. It's amazing. Like Apple, Amazon, Microsoft, you can't afford it. Go to them. But I suggest if you want to do fractional investing, just go to index funds. Not mutual funds. You want low-cost index funds, okay? So stop asking what I think about fractional investing. I don't like it. I only like it if it's indexed and I'm getting a fat dividend payment out like I did last week. Like I said, if you don't have much money and you're a fan of Apple, yes, do fractional investing. Put $10, $15 if that's what you just want to invest in strictly. Go for that. If you're beginning investing and you don't know what to start with, pick a company you like and you know a lot about. You understand how it works. Invest in that company, invest in several other companies, but don't do fractional shares, man. Like my boy says, you ain't a man unless you own shares, you know what I'm saying? Yeah, you did, shut up. But honestly, look, that's good for beginners. But if you want to do that, just go to index. We made a video about it. It's awesome. I have a long-term portfolio of index funds and maybe 2 stocks. That's okay with me, though.
If you're only doing index fund, are you actually learning about the market?
That's a good question. No, you know what? See, now he's trying to call me out real quick. Okay, literally, if you're lazy. Work. Oh, hold on. That's like putting me on the blast. Right? Listen, I can read financial statements. I can read what their business is about. I invest in stuff I like. I go by sectors because I like everything. I can't just own Apple and Microsoft. So I'm going to get a technology index fund so I can get a piece of everything. So yes, it's basically a lazy man's investing strategy, but that's okay. I don't like that question. That kind of put me on blast real quick. So my boy's trying to call me out. We don't do that. I tell you that, we don't do that. Okay, my favorite index is FXAIX. It's the Fidelity 500. They own the best 500 blue chip companies. They pay a 75-cent dividend, which is extremely good. Apple, Berkshire Hathaway, Microsoft, AMD is actually the top performer right now. Ain't that something? I actually bought them individually as well. Ever since they partnered up with Twitter and Google and Xbox. Another thing, we don't go by dollar amounts. We go by percentages. And that Fidelity made 25% of my money back already. And if that doesn't sound good to you, jump in the water and swim with the fishes. The cheapest one I own is $10, and that's the emerging market. That one pays about a 20-cent dividend as well. I'll give you guys all my list of index fund I have in my portfolio. I'll show you what I have. I'll show you what I made. My worst one is the marijuana one. I'm down 44%. I'm a long-term investor. Let me get back to the video. I'm a long-term investor. I never trade my Fidelity account. That's for me, for my retirement personally, or if I want to put a down payment on a house, because that's my next goal. Real estate, as soon as that market comes down, that's my opportunity to buy houses. That's my long-term goal. I've been talking about it for about 2 years now. So as soon as that comes, I'm taking action. Have an account for your long-term. Have one for you if you're an option trader or a day trader. If you guys go into TD, they have an educational, it's amazing. They have all this educational stuff that you can read and get like little points and rewards for it. I was reading about value investing. So value investing is basically, it's fundamental investing, as you're trying to find good opportunities in stocks. This is where you want to use valuation of the company. You want to make sure you do your down and dirty research on the company. You need financial statements. You want to be able to go into the balance, the income, and the cash flow to point out the strengths and find the weaknesses, as well as you want to do a cross-selection analysis, meaning you want to compare apples to apples, basically. So Intel and AMD, they make computer chips. Same thing. You want to decipher what their weaknesses in each company, which one has the better potential for long-term growth, because that's what value investing is. Also, value investing was made popular by the OGs, Benjamin Graham and Warren Buffett. They made value investing extremely popular. Also, if you haven't read the book, Intelligent Investor, definitely read that. But back to this. So, value investing, you're basically trying to find the intrinsic value of a company. Intrinsic value is basically the true value of the company. It's said to be, if the intrinsic value is lower than the market price, it's considered to be undervalued. So in the future, it will go to that value of the company. Market price is over the intrinsic value, is considered to be overvalued, and it's considerably supposed to drop in the years to come. The value is assumption on available data now, like the forecast of the company, the earnings per share. Market won't always agree with you on your value, so it could take years or it might not even happen. So you have to be patient for value investing. Investing, basically, you want to find the intrinsic value. And then there's income investing, which is finding blue chip stocks that pay dividends every quarter. And then we have growth. Growth is you find a sector that's going to beat its industry average and keep growing, or that's signed maybe a 10-year patent that will explode the company in years to come. All right, guys, this is the video. I'll come back with you another one in another couple of days. But this is Rel. I'm going to head out.